Yo, what's good? What's good, everyone? Happy Friday. Welcome to another episode here on the Inner Wealth YouTube channel. Give me 1 second. Just doing a really long stretch. Awesome. Super happy to be here, guys. Excited. Got lots and lots of charts to break down for you guys this week. There were so many opportunities, man. I can't wait to dive right into it, okay? So before we start, guys, for those of you who are new, for those of you who may not know who I am, my name is Bastion. I've been trading for I want to say since 2019. So finishing this year, I will be 5 years into trading. I've been consistently profitable for about 2 years, going into my third year of consistently profitable. It was a very tough journey. I can honestly tell you guys, my favorite year so far of trading has been 2023. I'll just keep growing, keep doing my thing. I've always wanted to be an educator. I've always wanted to show people and put them on trading. And as much as trading blew my mind, I believe that it can blow other people's mind as well. So I was really devoted into trading from the get-go. Right. And so, guys, I've been full-time trading since 2021. Yep. Since March of 2021, I've been full-time trading. And I've never gone back since. I own 3, I guess. So trading is one, education is another one. So I have, when I started trading, I was just an employee. And now, fast forward almost 5 years later, I own 4 businesses. One of them was bought out. I bought a small business for some money from this couple. My other 3 businesses were built. My trading business, my educational business, and my car detailing business. Okay, and so I don't just trade. I do multiple things. I do one-on-one sessions. My main 2 focuses is, of course, trading and doing one-on-one sessions with incredibly committed individuals. Okay, so that's really where all my time goes into in terms of a personal life. I don't watch too much sports. I don't watch too much entertainment. I'm not that much distracted. When it comes to my personal life, I'm either trading, teaching, learning, or playing video games. That's as far as it goes. Not much more detail than that, right? So, pleasure meeting all of you. Thank you for first time being here. I appreciate your time, energy, and yeah, let's just dive right into it. If you guys have any questions as I'm breaking down these charts, please let me know, because I know not everything will be clear to everyone right off the bat. So, don't be shy. Just ask questions. This is a judgment-free space, so you guys can, just not be shy, right? There's no wrong answers, no dumb questions. Okay, guys. So in terms of the dollar, okay, we've been coming. I'll show you guys something. Okay, look, this whole wick is still part of this whole order block here. Okay, and as you guys can see, we've been struggling to get beyond this high right here. Not just that, but if you narrow down your vision to see where these 2 overlap, you have an imbalance here on the monthly and this previous area of accumulation where the big drop happened, right? So you have quite an overlap here that we've been struggling. Check this out. 1, 2, 3, 4 months have tried digging into this price action and have failed to go through it. Okay, so now that we're getting some more rejection out of this area, I'm just looking at price action. You can see all up here we have equal highs, relative highs here. So if we did accumulate from here, it would make sense to be targeting the highs. Now, that is all dependent on how price action looks on an intraday perspective. So we'll dive into that here in a few. But for now, here on the weekly, we did come down below the equal lows. On a weekly perspective, we were looking at previous weekly low. And guess what? Previous weekly low was at 99.578. And our current weekly low was at 99.589. So we're just 1 point away, like less than a point away from that low, but we totally missed it. So now, just because we missed our initial objective doesn't mean that it makes us incorrect or incompetent for the week. It just means that you need to reassess. Sometimes, because we swept all this major liquidity, it didn't actually make sense to go for the low one more time if we were going to get this reversal, because most of the liquidity has already been taken. So there we learn that not all liquidity needs to be swept to the downside for us to move higher. And you can see here, we swept all those previous monthly lows, right? We swept all these previous monthly lows here. Okay, and so when we go down to the daily, because we took all those monthly lows, we have enough liquidity to continue to or start this retracement. Now, the daily didn't think that it was enough liquidity. Okay, so now we have some daily liquidity here. So we created this on Monday. On Tuesday, we sweep that previous daily low. And then we just start gunning for these imbalances and these highs. Okay, my attention goes drawn to this whole range here between the high that swept liquidity to the low that swept liquidity. This right here is my current daily range. If I'm looking at a weekly range, I'm looking at from here to here. So the daily range is a little bit smaller, but from here to here is my weekly range. From here to here is my daily range. Okay, so it's a little bit smaller because the weekly was up there. Okay, so now between this daily range, I'm looking at 50% or above for potential objectives. So for sure, I want to see this previous daily high is taken out, which is right in that previous daily opening gap, right there, that gap between the 2 days. Okay, that's really my objective overall for these longs on the DXY. I did want to see, like, if we would come and reject out of the imbalances to the downside, and we failed to do that. So after this imbalance and closing above this imbalance, okay, some people might feel like it's already too late to determine bullishness, but in reality, guys, it's never too late, right? As soon as we close above, okay, at this moment right here, look, at this moment we could still reject to the downside and to those equal lows. Still, it wasn't until this candle printed above this bearish imbalance that it showed us signs of strength. And because we have strength in the market, I'm anticipating more longs, especially out of this imbalance here. See how that bullish imbalance was our resistance for the downside? But because we have traded above and beyond it, now I'm utilizing that as a level of support. Okay, so we can go down there and go higher, or we can just go higher, period. So we are trading within this imbalance. I still don't see us 50% or above, so I'm just going to continue looking for longs. Okay, so now how did we take advantage of all of this throughout the week? First, I got to say that Monday was a very it was a short day, but it wasn't like the most erratic shorts. Okay, on terms of Tuesday, the short was again not super massive, but it was there, and then we ended up closing bullish for the day. Okay, and then that's when really on Wednesday you can see price just struggling. Okay, we struggled to get lower, we struggled to go lower. Okay, we struggle to go higher and we struggle to go lower. So price action is just building up liquidity, building up liquidity. It wasn't until yesterday and today that we've had some very impulsive moves. Okay, and besides that, we've been building up this liquidity. So we're going to go to the indices and see how we could take advantage of these shorts and the longs. Okay, Give me just one sec. I was looking at these Dow longs earlier, and they're gone. Oh no, they're not. Yeah, I was looking at these Dow longs earlier, from down here. It's obviously played out substantially already, so I'm not going to be chasing it. But I just wanted to see how that was doing. Okay, so let's dive into NASDAQ first, and we'll go from there. Oh, yes, bro. Thank you for reminding me. The watermark. Thank you, thank you, thank you. Yes. The watermark helps so much. Yeah, sorry about that, bro. Thank you so much for reminding me. Thank you. Yeah, I always have those on for like my lectures, and I totally forgot. So awesome. Thank you guys. You guys already know it's good. Okay, so we're gonna go to NASDAQ. NASDAQ on a higher time frame. So on NASDAQ, we were aiming for this previous area of distribution, and we got there. And not just that, but look what happens once we got there. Notice how price action didn't give us much of a rejection, and we really just stayed up there overall. So after we see no signs of rejection, okay, we can see price action is trading up. Now, this is that previous area of distribution that caused this big drop. Okay, so now what I want you guys to do is know what this distro did. Okay, it got us all the way down here. Knowing that, understand that this area is going to give you some level of rejection. Are we bearish? No. It does not make us bearish. Okay. Look at the way we've been printing and in the direction in which we've been printing. Okay. Coming into a previous area of distribution makes sense to get some level of rejection. Okay. And so looking at this whole range, we can come as low as this imbalance, even this liquidity here. Right? So again, getting a rejection is not the end of the world. It is an opportunity to position ourselves in better, okay? Retracements are not something to fear, but it is something to shoot for. Okay, you want to be in a retracement. You want to check retracements because they provide an opportunity to get a even better entry. Okay, so don't fear the retracements. Okay, so as we're climbing higher, you guys can see this daily or weekly insufficiency. That was my weekly objective. We did hit that very nicely this week and started rejecting. This was the distribution that caused this whole push down. So I'm anticipating some rejection, guys. Okay, now the rejection for me currently on a weekly perspective, from this low that came into this imbalance and swept the previous low to this high, that to me right there is the range. So when I'm looking at my range, I want to see liquidity. Okay, in terms of the weekly, liquidity wise, we're looking at this low. That's the only liquidity that we have. Okay, in terms of the daily, one second. In terms of the daily, we have 50% or below, this insufficiency, previous area of accumulation, but again, no liquidity. We need that liquidity. Okay, now we have NASDAQ here. Honestly, for next week, I'm really just looking at some more shorts out of this area right here that we're creating. It happens all the time. Friday, we'll leave the setup for Monday. It looks beautiful. But for now, I'm looking at 50% and below. Okay, so that's the first objective. Before we get here, we need to go down here. And we can go down here and straight to that one, or we can go down in here and build the liquidity that we're looking for to then go long, right? Because we don't necessarily have to go to that one. What we're looking for is liquidity. We're not necessarily looking for a specific level and only that level would go long. No. We're keeping our open minds. We're looking for internal liquidity, whether it's built on the way down or it's already been predetermined. Okay? So NASDAQ, earlier this week, That's some really nice longs. Okay, Monday comes in. Monday comes in, and we start trading within this daily, this 4-hour imbalance. Okay, not just that, but the 4-hour comes in, and the daily comes in, and we sweep that previous daily low. So right off the bat on Monday, we were looking for some longs. Out of this imbalance, below the lows, we started accumulating. Okay, now we didn't. This isn't a break right here. Lower low, lower high, lower low, break. Like that's not the break of structure. What actually brought bullishness into the market was this right here. The fact, and when we traded above and beyond that high, that's when I was started to be bullish. Now, some people that may look a little too late, I don't like to tell myself that. Like, I'm never too late for anything. I'm just in time, and I'm exactly where I need to be to receive exactly what's meant for me. Okay, so given that affirmation while going into the markets, okay, just follow your plan. Okay, we have a lower low, a lower high, and then a failure to create a lower low. That makes this our mitigation candle. Okay, that makes this our mitigation candle. So now I'm looking at this whole area and balance and everything here, and I'm looking for price action to go long beyond this current move here. Now check this out. Okay, once we traded above and beyond that 1 hour, okay, that 1 hour mitigation candle, I'm just gonna cut time right here so that we don't lose it. Okay, all you have to know is, okay, so prior to the longs, okay, once we take out this high here, we have to look for potential areas of targets. Okay, and looking at this whole area, we have that imbalance up here, right below those equal lows, so equal highs. So I'm looking at that imbalance there and intermediate targets on my way there. Okay, so now I'm looking at this previous daily high and this previous area of distribution here. Okay, so now we're going down to the 15-minute, and you can see it a lot more clean here. The open takes place, opening price comes, and we come right back to what? What do we come right back down to? That mitigation candle, right? That 1 hour mitigation candle. Okay. So once we come back to that 1 hour mitigation candle, take out some of this liquidity and start going long, what I look for is insufficiencies that are created on the way there. So now I'm going way too fast. We hit the 1 hour mitigation candle. We shift structure bullishness. We create, now I'm looking for imbalances to support my bias. A manipulation is created by an insufficiency. Okay? A manipulation is created by an insufficiency. And for me, this imbalance here is everything that I need to go long. Stop loss below the low of the imbalance. First immediate target is a 1 to 2. But you guys already know that we're aiming for that high overall. Okay. And there goes price action. Okay. So now, even on the 15-minute, you guys can see it a little bit better as well. Like imbalance. Stop loss below the low of the imbalance. Aiming for that high to the left. We create this next imbalance here. Stop loss. You can shift it up. Okay. After we created this imbalance here, we created this next one right here. Okay, I don't like to go too far out. So like, for example, if we created that other one, because it's above the high, I don't want to follow that one. I want to just be guided by the one that's below the liquidity. So from my stop loss being below this low, once this imbalance was created, only then will I move my stop loss to the low of that imbalance. And again, once an imbalance is created, only then will I put my stop loss below the low of the imbalance. So now my stop loss goes from there to here. My entry is down here. My stop loss is way in profit. I just let it do its thing. Boom. All right, that's how I manage my trades. When it comes to my stop losses are determined by the same criteria that gave me my entry, which is an imbalance. Drop some 7s in the chat. That's making sense. Some 7s in the chat for me if that makes sense. Yeah, those NASDAQ longs at the beginning of the week were really nice. Really, really nice. I mean, we came back the next day pretty deep, but overall, guys, the longs have been outstanding. The very next day, okay? The very next day. Now, guys, one thing I'll note here is I don't take trades till after 10 a.m. Okay? So I wait till 10 a.m. for me to take a trade. So now let's go to 10 a.m. 10 a.m. window starts right there. My trading window is right there. That's it. That's my trading window. That blue square right there, that's my trading window. For executions. So you had 1, 2, the 5-minute and the 15-minute. Okay. Let's go back to NASDAQ here on the 5-minute. And now again, let's go back to the theory. I don't trade past 10 a.m. Or I mean before 10 a.m. Okay, we're going to go to 10 a.m. here. To 11:30 a.m. And we'll do 10 to 12. Those 2-hour windows. Okay. And then we'll do it over here as well. Even though I'm never really on the charts by 12, we'll leave it there. Okay, now let's go to the same window. Okay, we take out liquidity. Okay, we come into obviously a previous area of accumulation here on Tuesday. We come into this previous area of accumulation. Okay. On the 1 hour, you can see it a little bit more clear. We've pushed up. This is that impulsive move up. We go down into that area. Not just that, but let's go to the range. We go to 50% and below of that area. Okay, of that range. And so there on the 5-minute. Let's go to the 15 so that we're not skipping time frames. In the 15-minute, we have that push lower. Okay, we got a lower low, lower high, and a failure to create a new low. A failure to create a new low. What does that make this candle right here? If we have a failure to create a new low, what is this candle called? Drop it in the chat. If we had a failure to create a new low, what is this white candle called? And I'll wait. Yes. Yes, Brandon. Thank you. Thank you, Brandon. Yeah, yes, it's an order block. You guys are not incorrect. It is an order block, but it's called a mitigation order block. Okay? A mitigation block is the one that, let's say we had a lower low, lower high, a failure to create a lower low. Okay? That doesn't make this a mitigation candle. It only is a mitigation candle when we shift structure the other way. So just like we shifted structure the other way here, that's what made this a mitigation candle. Okay? So that white candle there, that's our mitigation candle. We go within our window. Okay? We have our mitigation candle here. A lot better. Here you can see it on the 5 minute. It's a lot bigger on the 5 minute. I'll point it out to you guys. Okay? So we have that mitigation candle, and we have imbalance. So now we have an insufficiency, we have a shift in structure, a failure to create a new low. Okay, we move structure to the upside, confirmed bullishness, and we have the imbalance in our. Now this imbalance, because it's an overlap, what is it overlapping? It's overlapping the mitigation candle. So the mitigation candle is right here. The imbalance is right here. Where those two overlap, that's my entry point. Write this down. Where those two overlap is my entry point. We're going to narrow it down, and it's right there. You see that blue area? We don't need the mitigation candle anymore. We don't need the imbalance. That overlap right there. If we can leave everything else out and just focus on that, stop loss below the low of the imbalance. It comes back, yes. But as long as your stop loss is according to where it needs to be, it was an incredible trade. Taken to that previous daily high, or taken to that imbalance. Incredible, incredible trade. Wow, yeah. So what an incredible trade. Any questions, comments, or observations so far? Let me know, okay? Let me know. All right, so let me dive into Wednesday, Thursday, Friday. In just a second, I'm going to answer the door before my dogs start going crazy. Okay, so give me just 1 second, and I'll be right back. If I can find the mute button. Okay, give me 1 second. All right. So Wednesday, Thursday, Friday. So now, no, we've hit a major, major low level of resistance. Okay, on here the weekly perspective, hit a major, major level of resistance. So given that, if you start seeing distribution or divergence between the assets, it's a pretty good indication that you're gonna start seeing a retracement. So now, how do we know that? Let's go review at least Dow or Nas and Dow and S&P right next to each other. So here we have it on the 4 hours. So let's go to the 4 hour here, and we'll go to S&P on, what was it? Wednesday. So now on Wednesday, let's go over here. Have Monday bullish, Tuesday bullish, Wednesday bullish. So we have the highs going upwards. Here we have the highs going upwards as well. Okay. So no divergence between S&P and NASDAQ. Let's go look at Dow Jones. Okay, so now let's go look at these guys. We have Monday that went way above and beyond. Okay. Or Tuesday that went way above and beyond. Okay, no slight retracements on that on Dow like we did on NAS. And then from Tuesday to Wednesday, we have a higher high here as well. And then a higher high from Tuesday to Thursday. Now, we may not have seen the divergence, from Wednesday to Thursday. We may not have seen the divergence on the Tuesday, but we have confirmed the divergence from Thursday to Wednesday to Thursday. Okay? And so maybe yesterday, which it did throw me off as well as for me, it did throw me off that we were going short because I was waiting just for a little bit more longs before we went short. It did throw me off. So that first day it threw me off, but by that second day, when we had that divergence between Dow and NASDAQ, that just kind of shows you, okay, if we're moving in opposing directions, my current trend is coming to an end. Okay? If there's divergence between the majors, and it's a significant divergence. We saw there, it was a daily highs that were diverging. Pretty significant level of divergence. It just indicates that your current trend is coming to an end. Okay? So, as you guys see divergence, maybe on the first day it was a bit less clear. Okay? But as we started shorting off, again, we're going to bring up the other charts. On the 1 hour, you can see S&P, the 1 hour, okay? Here's where divergence gets a little bit more in detail. Okay, from 9 p.m. to 2 a.m., we have that move higher. Okay? Just like we do here. From 9 p.m. to 2 p.m. Move higher. From the lows now, from the opening to 3 a.m., we have higher price action. On NASDAQ, lower. S&P continue to move higher through to all the way to 9 a.m. NASDAQ was already moving lower. So NASDAQ, not only did it create a lower low, but also a lower high. That is called bearish divergence. Okay, when one price action is moving higher and the other one is failing to move higher and pushing the lows lower, that's the guy that you need to short, right? The weaker asset. If you short the asset that's a little bit stronger, it's not that you're going to get it incorrect. It's just that more than likely, after you short that stronger asset, you're more than likely going to go back to this guy, see how hard it dropped, and think that this one needs to catch up. Okay? It happens to everyone. Okay? Please don't tell yourself that an asset needs to catch up. Okay, sometimes these assets, I've shown this on a on Technical Tuesdays from last week. I'd advise you guys all to go check it out. On Technical Tuesdays of last week, I went over how to find your divergence on a higher time frame, so that way you're not thinking that one asset's falling behind, the other one's moving forward, and like it usually almost never is the case because you're looking at the smaller time frames. The bigger time frames will indicate, okay, let's see, Nasdaq's already at the highs, okay? Nasdaq is already pretty freaking high up there. So let's look at the Nasdaq on a monthly perspective. Okay, it's pretty high up there. Dow is pretty high up there, okay? Now, Dow's first jab into being pretty high up there was here. What was that? It was December 22nd, December of 2022. So in December of 2022 is when we gave our first jab to the upside on Dow. Nasdaq on December 2022 was down here. So while a lot of people may think, oh, Nasdaq, like the Dow Jones needs to catch up to Nasdaq, S&P needs to catch up to Nasdaq, I feel, me personally, I feel like Nasdaq has been the one that's been doing the catching up to the other indices. The other indices have been in premium for a really long time and have reached premium multiple times. Nasdaq was the one that stayed on the downside the longest and has been trying to catch up for months now. And now we're officially all at premium and high up in the range. Officially. Okay, so if Nasdaq is moving lower and you guys see Dow Jones and SPX move higher, just know that Nasdaq already hit the objective it needed to hit, and now Dow and S&P are going to hit the objective that they need to hit before they start reversing. That, guys, is totally normal. Okay? Just be aware on the higher time frame which one is actually the one catching up. Don't just go on the 1 hour and say, okay, today Dow should be the one catching up. That's going to kick your ass. I'm telling you guys that right now. Sorry for being so upfront and very like blunt. But that right there is going to kick your ass. Okay? So, if you're going to if you're going to come to the conclusion that one asset is lagging behind and one asset is is moving ahead of the other one, before you come to that, you determine that, before you marry that bias, okay, check it on the higher time frame. Okay, these shorts, look at that. I feel like these shorts are gonna end up playing out a little bit more. Nice shorting opportunity here. You know, if we leave that 5-minute imbalance there and then just come back to it, that area right there really gets my attention for continuation to the downside, to the Asian low. Even not even just the Asian low, like I feel like we're gonna go to previous daily low. I'm not trading anymore this week, but my eyes are very attracted to these areas. Okay, anyways, so when you're looking at areas that are catching up, doing this, doing that, just remember what is the higher time frame doing? Okay, what is the higher time frame telling you? All right. So Nasdaq shorts again, we're super clean. Okay, even if it's just 1 hour right there, super clean. Okay, previous daily low, 1 hour short. Look at that. This is why I like taking trades on the higher time frames. Sometimes that's all you need. I can't tell you how many people I saw getting clapped right here on the shorts, and then it shorted. Yeah, all I would say, guys, is sometimes all you need is to step back a little bit. Just step back. Give the trade enough room. Excuse me. Today's shorts were a little bit tricky. I'm not gonna lie to you guys. I still see shorts. Okay, still seeing shorts. I want to see price action. Yeah, just kind of return back into this area on Nasdaq, and just continue shorting. You know, I don't think the shorts are done yet, but I do think that we can come back and short some more. But overall, previous daily low is what I'm looking at for Nasdaq. Yes, thank you for showing me that not every trade needs to be on the 1 minute. Yes, please, please, guys. I'm telling you, as you journal your trades, put a timestamp on it. Not like at what, yeah, you should know what time you're taking your trades, but also put that stamp on like whether you took it on the 1 minute, 5 minute, 15 minute, 1 hour. See how many, like my prime time frame for taking entries, I already know is the 5 minute. That's my prime entry point. Why? Because I have seen it for the past like year. I have most of my trades that I take on the 5 minute hit take profit. Most of the trades that I take below the 5 minute get clapped. And so I spend most of my time on the 5 minute or higher. Okay? So just it's about finding like what works best for you, right? Yeah. I'm going to go a little bit into Dow. I didn't trade Dow too much this week. I'm going to go a little bit into Dow, okay? So this week, okay, this month, I was looking at that previous monthly high right here, December 22nd. We took that out not too long ago. I mean, we took it out this week, okay? So my new objective is this high right here, which is the high of February in 2022. Okay, that's the high that I'm looking for right now. I do think that we're going to continue going higher. Okay, on a daily perspective, of course, previous daily high. Okay, now when price actions are diverging, I stay away from the one that's not following the DXY. So for example, this week, Dow Jones, while DXY was shorting, it was going long, right? But then while DXY was going long, so was Dow. It was going long hard. So given that, me personally, I didn't trade Dow this week. Why? Because it was very disrespectful towards one of my main confirmations or supporting confirmations, which is the DXY. Yeah, I got you guys. I got you. Yeah, that 1 minute can be tricky. Well, bro, I guarantee you, like, in the next 5 years, we're all going to be beast on the 1 minute. It's just, it's going to take time till we build that confidence that we have on the higher time frames, on the lower time frames. Like, I promise you guys know Trade with Matthew, right? Most of you should know Matthew, and you guys should know that Matthew was not on the seconds time frame in the first few years of his trading career. Like that level of confidence was developed over the years of him trading on the 5-15 minute, right? So I promise you guys, we'll all be killing it on the 1 minute somewhere down the line this year. Okay, but for now, the longs on Dow were very clear, so you guys can see same setup. Okay, Monday imbalance. Okay, except on Dow, I liked it a lot more on the long setups. Why? Because we had this sweep of the low, of the Asian low. So once we swept that Asian low, okay, in the 15 minute, you guys can see it here. Very clear. Clear as day right here. Boom. Shift of structure. We're clearly going to the bullish side, right? Now, if you're on the 15 minute, let's say you're on the 1 hour, and you see the break of structure, but you don't see an imbalance, only go one time frame lower. If one time frame lower does not give you the imbalance, do not go any lower and try to fucking find one. because that's just you forcing it. You should either find it on the time frame that gave you the displacement or the break of structure, or you will find it on one time frame lower, but nothing beyond that. Okay, so now let's say I'm on the 15-minute, I'm gonna go to the 5-minute. Okay, nothing beyond the 5-minute, because then I'm forcing it. Okay, and you guys can kind of see it a lot more here. Okay, we have lower low, lower high, lower low, higher high, and then a failure to create a new low. Okay, a failure to create a new low. Now we did sweep the low and kind of break structure here. So because we swept the low and broke structure, this is in a mitigation candle, but it's called a breaker. Okay, now this breaker is the one that broke structure, and the largest body candle is this one right here. So now let's go to the 5-minute and try to dial that one down a little bit. Yeah, it's basically that one right there. Okay, so if you drag that across and then you find your imbalance and then you narrow it down to the overlap of that imbalance, which is just this right here and this right here, that overlap is my entry. Okay, which is right here. Now sometimes the imbalances are a little too big. When that happens, guys, I usually take them off the 50%. Now you have the risk that it may not come to 50%. Okay, but when I have a large imbalance, I'm gonna take it off the 50% of that imbalance. Okay, I won't take it any other way. Say, so we have the overlap of the breaker candle, we have the overlap of that imbalance. Okay, immediate target is that high. Oh, that was fast. Okay, stop loss would have been in the same spot, still safe. We're looking at those highs, so we're looking at those previous daily highs. Second target, second and final target. Okay, now you have some imbalances here. We may come back to that imbalance, we may not. That may be a re-entry, doesn't have to be. We have another imbalance here. That may be another re-entry. Given that it's so close below the lows, I love trades like this. Right below the lows, nice re-entry, following order flow. That stop loss, that imbalance should not be messed with. Full profit at that high, immediate high. Boom. Will it hit? Will it not? Who knows? We may play with that imbalance, but order flow will hit. Order flow will do what it does best. If we're bullish, we should respect the bullish imbalances, especially when we're chilling right below the lows. These are like my secret, like it's not much of a secret, but these are like my signature trades that I love these because they're so, like, I will refuse to move my stop loss because they're so fucking clean. They're so easy. Imbalance, immediate liquidity. Imbalance, immediate liquidity. It's so easy. Right when we're chilling up below major highs, promise you that imbalance that builds you up to it is such an easy trade. Okay? Those 15-30 second entries are crazy. Yeah, bro. They're crazy. I love Matt. Trust me, like, I love the way that he trades, and I respect him a lot because he can manage himself and his emotions in the seconds time frame. Something that I can't do myself as adequately as I wish I could. You know what I mean? Because that takes a lot of strength. Anyways, trade gives away, guys. That's kind of how I would have played that day. Okay. Really clean longs. Super clean. Yeah. And then we just kept doing it. Right? Except some days provided zero entry. Alright, some days provided zero entries. Some days provided too many entries. right? Like we swept the Asian low here. Okay. We had a failure to create a new low, a shift in structure, right? Then imbalances. But personally, I was looking at this trade this day, and I just didn't find an entry on the 1 minute. So you remember how I usually look for imbalances? Like I just don't see anything here that I could have entered on. But I was looking in there, or at 50% of this imbalance, which also didn't get to it. So yeah, there wasn't much on Dow. Dow was just the one that was going the opposite direction for me, so it was very hard for me to follow Dow. Nasdaq, we already went over that. S&P, I won't go over too much, other than the fact that that area still gets my attention. Yeah, this whole imbalance, the overlap of these two imbalances still get my attention. I still think we could potentially short to these Asian lows and immediate lows, personally. Yeah. If we go up here one more time, like, and this is our whole range, high to low, that to me is internal liquidity. So maybe we come back up a little bit higher, but personally I think we're gonna fall and dump right from here, from this overlap. So anyways, those are my thoughts through indices. Do you guys have any questions, comments, or observations? I know I ran through those. I didn't want to take too much time on trades that were not the highest quality trades in my eyes. Wanted to really spend the times on the trades that we did take. Nasdaq, I'll show you guys the trade that I took on Nasdaq, that, you know, why I'm not trading for the rest of the week. It was actually right when we hit that high. Yep. We were going for that previous daily high, okay, and we were going into that area. And so I never take just the first tap into an area. I always think that an area is going to take multiple times before it like stops. Okay. So I always, like, this was the first area into that imbalance. I'm not just going to say, okay, from here it's going to dump. Like, nah. We usually tap into those areas a few times, especially if it's on the higher time frame. So when I was looking here on Nasdaq, okay, let's cut back the time. When I was looking here on Nasdaq, I was looking at this 1 hour just climbing itself up. What really got me on the long was the fact that we closed bullish here on the 1 hour. Okay, once we close bullish on the 1 hour, I'm looking at this whole area and I'm like, okay, look, this is the 9 a.m. So look to the right. This is 1 hour. This is the 4 hour. Check this out. Four-hour imbalance. What happens at 10 a.m.? A new 4-hour candle. Boom. We go into that 4-hour imbalance. Now let's go into that 4-hour imbalance in the smaller time frames. Okay, once we go into the 4-hour imbalance. Okay, once we go into that 4-hour imbalance, let's go to the 5-minute. I'll just keep cutting some of this out. Okay, right there. Once we get into that 4-hour imbalance, I'm looking at that previous 9-hour low as my intraday liquidity. Okay, I'm looking at the 5-minute to see if we get a shift in structure, and you guys can kind of see here a little better on the 1 minute that we did indeed shift this structure here. Now I wasn't on the 1 minute, I was on the 2-minute, so this is how I viewed this. Okay, I saw the manipulation push down into the 4-hour, okay, which was right here. This imbalance right here, the push down. Then we have the push up that swept this previous high. That right there is another imbalance. This price range right here is what you would call a balanced price range. Okay? Because it's a balanced price range, just an immediate rebalance, okay? Because it's a balanced price range, price in essence should not go below that, okay? And close below it. If it closed below it, we're back to being bearish. But the lines of bullishness are being held by this overlap right here. And this is where we went in, by the way. Right there on that first tap. And then I went in right here. And I went in again right there after we took out the low. As to me, that was the internal liquidity. Okay. And I took this to the high. 1 second. Yeah, 1 sec. Let's see. Yeah, let me see where my trades are. 1 sec. Yeah, I can't find the I can't find the picture of it, but either way, I entered here and here, and I exited right on that liquidity sweep, on that previous liquidity sweep. I didn't go all the way to the high. I can't just lie to you guys and say that I did, because I definitely did not. Stop loss below the low of the imbalance, and I went to that high right there. Nice 1 to 4. I went in it twice, so there was double my risk. So I was like about 1.2% in risk here, and it just immediately went to my area. I wasn't able to go break even or anything because it was just very immediate. So yeah, that's how I ended my week, is with this trade right here. Super simple again. It went way beyond, I believe. Oh no, it didn't. It came right back. So I'm glad I took partials. I mean, I'm glad I closed it out. But then yeah, it just kind of played around that high. As I mentioned, usually we'll play around these bigger time frame points of interest quite a bit before we start falling. I can see we spiked the highs here, so maybe we start falling. Yeah. So anyways, that's how I went about my day. And again, always after 10 a.m. So here's the window. 10 a.m. is right here. 10 to 11. Couldn't be easier, guys. Anyways, I have a couple questions on the chat. So liquidity void and fair value gaps, what's the difference? So liquidity voids and fair value gaps. Liquidity voids are, let's say, what is a good example of a liquidity void? You know what? I'm not really going to touch on that subject. Actually, I'm going to be very honest with you. I don't use liquidity voids. So I couldn't really tell you, because how I learned it years ago is not how I see it going around today. So liquidity void would be just not an imbalance, right? You see how this whole thing has multiple imbalances in it? Okay, I've been taught that that is a liquidity void. But then a couple years later, the same person that taught this is teaching now that the liquidity void is something different. So I'd rather not touch on the liquidity void part, because it's changed since I last learned it. And, you know, I'd rather not speak on strategies that I'm not 100% on, or that I haven't put enough back testing into. You know what I mean? But that's when I learned that's what a liquidity void was. This was back in like 2019, 2020 is when I learned that. So it could be totally different today from what it's being taught out there. How do you deal with different imbalances in different time frames? I do not go any lower once the price is clean enough for me to take my entry. Because if you go lower, you'll find multiple entries. And so, like, if the 5 minute looks attractive enough for me, I'm not going to go any lower. I will not go any lower if all I need is the 5 minute. There's no need to go any lower, because then you're going to find multiple entries, multiple zones, multiple imbalances. Now, all of a sudden, your perfect little setup with a 1 5-minute imbalance and 1 order block has 3 order blocks, 3 imbalances, and liquidity in it. And it's like, whoa. Like, you were, either way, you're going to take the long, right? It's a matter of which one looks the cleanest. So for me, if the screen is not clean, you switch it, okay? But if the screen is clean, why go any deeper? Is Nas daily distro convincing to you? Are double imbalances your main entry targets? It's not double imbalances. So to answer your last question, not double imbalances. My entry points are overlapping confirmations. Overlapping confirmations. Notice this one was not an overlapping imbalance. It was an overlapping confirmation of the 5-minute breaker and the 5-minute imbalance, right? That's what that was. Is this 5-minute breaker, which was all of this, and then this 5-minute imbalance, which was right there. And the overlap of both of them is right there. So I take overlapping confirmations as my entry points. I won't take one confirmation alone because it does not make sense to me. All right, that's not to shit on anybody else's criteria. That's just for me. That's my criteria that has to be met. 2 overlapping confirmations. My entry is the overlap. That way, like, if I have an imbalance over here and imbalance over there, I'm not like, oh, which one do I take? Which one lines up with the overlap, with the multiple confirmations? That's what I go with. Is Nas distro? No, it's definitely convincing. Yeah, no, it's definitely convincing. Like, we have this whole area. Check this out. We have this whole area. So NASDAQ, from that low to that high, like, we have room to go lower. 50% or below is right here. So we have room to go lower on NASDAQ. We did take out the Asian lows. So now I'm just like, you know, the main objective for the day has already been taken. Or wait, actually, this isn't it. I'm missing hella data. Okay. That whole range is already taken. Yes. Like I said earlier, I'm looking for Monday's price action to come into this imbalance here. And then just continue shorting toward the downside. Towards this low or this low. So yeah, I am looking for shorts on NASDAQ for sure. Yeah, I was bullish because of this candle here, and then we took out that candle and traded through it. Now I'm bearish. So I just kind of let price action tell me what to do. Instead of just anticipating things, I just wait for price action to tell me. And that may bring me to missing a lot of trades, but I rather miss trades and keep more of my profits than try every single fucking setup that comes my way and give back all my profits and end up breaking even, or worse, in drawdown. Yeah, brother, of course. Great questions today, guys. Great session. Thank you guys so much for tuning in. Happy freaking Friday. Let's have an amazing weekend. Guys, please do me a favor. If you're backtesting tomorrow morning or in the morning, cool. Give yourself an hour or two to backtest. But besides that, guys, go enjoy your week. Go enjoy your weekend. Go enjoy your family, your loved ones. If your why is, you know, I want to do this for my family, to help the people around me, go spend time with the people with your why. Like, go spend time with your why, doing a little bit more of your why you're doing this. Because if you spend so much time work, you're not going to enjoy it. So, guys, we're doing this for time freedom. Go enjoy your weekend. Go have some time with your loved ones. Bring your why closer into your life. Right? Because trading's not going to bring you closer to your why. You yourself have to bring yourself closer to your why and have to be around and bring yourself closer to the things that push you and motivate you to be a better person. Okay? So with that, guys, have an amazing weekend. Take care. Trade responsibly, and I will see you guys on Monday. Guys, if you don't know, Mondays are live trading session. I'll see you guys at 9:15 a.m. Every Monday at 9:15 a.m. We're going live. We'll start with like 5-10 minutes of meditation, and then we'll actually be trading live together. Full transparency. I'm not hiding my trades. I'm not hiding my profits, my stop losses, anything. You guys will see everything on that screen. So with that, guys, take care, clap easy, and trade responsibly. Thank you, guys.